Lots of
Tuesday.
Lots of action.
Tuesday, Ed.
Tuesday. What's Tuesday mean?
Tuesday means the day after Monday and the day before Wednesday.
Oh, yeah. It's a day.
Yeah, it's a date. Anyways, lots of really cool things happening.
Well, Tilray.
Tilray, $82 fucking dollars.
We mentioned it yesterday and said going into a release of shares, they always seem to...
Well, actually, the point was made yesterday by Alan Brockstein that very often these things go down until the day of the release and then they pop.
Right.
So what is the actual day of
I thought it was the 15th.
I thought that's the 15th of January, too.
Yeah,
so it's a week premature. Maybe people were listening to Alan's discourse and saying, I know, I'm going to get in front of this fucking thing. I'm going to buy it now.
Yeah.
And now it's going back to $300.
I would have probably only bought like maybe 20 or 30,000 shares.
That's a big chunk of dough.
Oh, I mean 2 or 3 shares.
2 or 3 shares. Can I get 3 shares of...
AUSA's having a big move today. Again.
What?
And hemp.
Who?
AUSA.
Oh, Jesus, I know. We've been telling people to buy that stuff for weeks. Well, now it goes up, and now
you're afraid to buy it.
You know what, Ed? We got a big show today. You know why? Cam Battley's joining us today.
Oh.
He's going to talk to us about that press release they put out this morning, wherein they projected $50 to $55 million in Q2 revenue.
I was going to say Cam, I think, has a few followers.
Cam has a few followers. Anyway, so Cam's going to be here at 4 o'clock, not 3:15. 3:35, we're going to have Narbe Alexandrian, who is the Business Development Officer from Canopy Rivers. We're going to talk about how Canopy Rivers identifies opportunities for...
is that the ticker RIV?
Yeah, Canopy Rivers, the investment arm of Canopy Growth Corp. 4 o'clock, we're going to have, while the market closes, then we're going to have Cameron here. Then Charting Man Dan at 4:10.
We don't know yet.
Well, we might mix it up a little. Yeah. We're not.
A melange.
Yeah, a melange.
Melange.
Yeah, we might mess with that order a bit. So, anyways, lots of mixed colors in the spectrum of cannabis stocks today.
You're getting winners. Hemp's up about 20% today, I think.
HEMP on the CSE.
Yeah, hemp.
Yeah, hemp. Yeah.
Talking about the Farm Bill.
Well, what do you mean? The Farm Bill's been signed.
My father just told me to do something here.
Your father?
The Holy Father.
The Holy Father, yeah. He's the guy in the earpiece. How about JUJU? Was looking like it was going to, finally catch a rise, and that's got to 10 cents.
It hit 10.5, 11.
Good point. The glass is definitely half empty. Anyways, we're hoping for better things from JUJU. Just a matter of time till we liquidate it if we don't see what we like. DynaMed. Now, this company's been struggling. 363, it's up today. But do you know what DynaMed does? DynaMed is logistics for all of the delivery services in Southern California. The CEO and founder, Ed Fields, is going to be here next week to tell us about why the shares are actually so undervalued.
DynaMed. No, I'm hearing DynaMed or DynaMed?
DynaMed. DynaMed.
A med. You get meds there.
DynaMed!
Dynamite?
DynaMed! Anyways.
That's very explosive. Get
yeah.
it? Dynamite? Explosive?
Yeah, it is. Tis.
Did you ever light a stick of dynamite thinking it was a candle?
No, but my brother and I, when we were young, we used to take M80s, which are some pretty sizey little firecrackers, like they're like this big and that fat, and we used to hold them in our snowmobile mitts while they went off.
That was smart.
Well, if you held it the right way, it would just blow up and sideways. But if you held it the wrong way, it would fucking hurt really bad.
And you did this?
We used to do it all the time.
How many times do you think you did it?
Well, we went through, I don't know, 3 or 4 dozen M80s.
Why wouldn't you progress to something like dynamite?
We couldn't buy dynamite back then. Nor that we can now.
You can make it, can't you?
You're just a troublemaker, aren't you, today, Edward?
Yeah.
You want to make dynamite. Boy, I don't know.
Okay, so forget about making dynamite.
Yeah.
Look at this hemp, up 22 cents to $1.28.
Yeah. Here we have the wondrous insight of mainstream capital markets coming to bear in that the top analyst at Barron says, here's 3 stocks that are ready to grow. Canopy Growth Corp, Tilray, and KushCo. So Bill Alpert writes this. Now let me ask you this.
Okay.
2 of these are on what exchange?
Toronto Stock Exchange?
No. Well, actually, one's on the NYSE, one's on the NASDAQ, and KushCo, it's an OTC Pinks.
Did you say Canopy?
Yeah.
Well, Canopy's on Toronto as well.
Well, on Toronto as well, yes.
KushCo's on the Pinks.
Yeah. And so this guy's trying to pass off this thing as like, oh, Tilray, Canopy, and KushCo.
Here's a good one for you.
Yeah.
What's the ticker? What's the ticker for KushCo?
This is what we call how not to promote a company, by trying to pretend like, oh yeah, KushCo is right up there with Canopy and Tilray, and yeah, it's in this list because no, I'm not a paid hack who's managed to sneak in this thing into the news feed, and I'm trying to pass it off as actual analysis. Nice one, Bill, but ixnay on the.
What's the market cap of KushCo? Like, for instance, Tilray.
KushCo. Well, let's take a look at KushCo. Let's see what kind of stock we're dealing with.
Yeah,
here.
let's see.
All right. Now we're playing right into Bill's clever little plans here. We're talking about the stock.
He's obviously made a very good decision because he's got us talking about it.
Fuck, I know. And look
Adding
at us.
more.
Just a couple of clowns swallowing the bait.
I want to be Kathy's. No, that's. Never mind.
Jesse's girl.
No, but there's Kathy's clown, right? You said something about a clown.
Yeah, I don't know, Ed. Don't bother me. Okay, KushCo. Let's see. KushCo. I've heard of KushCo. Is that Kush Bottles? KushCo Holdings. OTC Markets, KSHB. $6.19 a share. Yeah, that's really in the same league as Canopy.
Well, it depends how many shares there are. 618, it's up 17 cents.
$496 million market cap. $500 million market cap.
Okay.
Well, still, I find it disingenuous to try to pawn that off as one of the majors.
Really?
Yeah, don't you? You find that a little distasteful?
I don't know. You know what? Look.
It's like, well, how are we going to have how is a retail investing public ever going to invest with confidence when we got this kind of bullshit going on? You know what I'm saying? You know what I'm saying? Anyways, that's my little rant for the moment.
Bullshit.
What the hell is wrong with me? Okay, let's go talk to, it's 3:09. Now, we have a little...
What about the news?
Got some news? Liz West is here, my namesake.
Thanks, and here are the headlines moving markets today. Canopy Rivers Inc. has announced that its 49% owned joint venture, PharmHouse Inc., entered into a syndicated credit facility with the Bank of Montreal as agent and lead lender, and with the Canadian Imperial Bank of Commerce and Concentra Bank as lenders. Under the terms of the credit facility, the lenders will provide PharmHouse up to 80 million Canadian dollars of secured debt financing at a rate of interest that is expected to average in the mid to high 5% per annum range over its 3-year term. Canopy Rivers Inc. has also completed an equity investment in Headset Inc., a data and analytics service provider for the cannabis industry. Canopy Rivers subscribed for $4.08 million of Series A preferred shares in Headset, representing the company's first entry into a technology-focused cannabis vertical. Headset is the first real-time business intelligence and analytics software platform for the cannabis industry. Aurora Cannabis Inc. provided an expected revenue range for Q2 2019 for the period ending December 31st, 2018. Full results will be published on Monday, February 11th, 2019 pre-market. And based on preliminary results, the company anticipates revenues for Q2 2019 of between $50 million and $55 million, compared to $11.7 million for the same quarter last year, and compared to $29.7 million for the previous quarter ending September 30th, 2018. The results reflect an anticipated revenue growth rate in excess of 327% compared to Q2 2018. And Aurora Cannabis CEO Cam Battley will be joining James later on the show. CanTrust Holdings Inc. has applied to list its common shares on the New York Stock Exchange. Listing of the company's common shares on the NYSE remains subject to the approval of the New York Stock Exchange and the satisfaction of all applicable listing and regulatory requirements. Shoppers Drug Mart has launched its online platform for the sale of medical cannabis. Patients have access to a number of products from Canadian licensed producers shipped directly to their doorstep. The company will provide support for patients through the Shoppers Cannabis Care Center, a virtual team of professionals who provide counseling and support for patients. Under current regulations, pharmacists cannot dispense medical cannabis from a pharmacy. Emblem Corp announced that Emblem branded cannabis oils are now available online through Shoppers Drug Mart to patients with a valid medical authorization. MedMed Enterprises Inc. announced that Treehouse Real Estate Investment Trust has completed its first round of capital raise at $133 million and will partially use the funds to purchase properties from the company. FSD Pharma Inc. announced that its wholly owned subsidiary, FV Pharma Inc., has completed the harvest of its second lot of cannabis and successfully passed all analytical testing. The company can now request a pre-sales license inspection from Health Canada, the last step prior to the issuance of a sales license under the Cannabis Act and regulations. New Strike Brands Limited announced that its wholly owned subsidiary, Up Cannabis Inc., has been accepted by the Manitoba Liquor and Lotteries Corporation as an official supplier of non-medical adult use cannabis to the province's licensed private sector retailers. Manitoba is the 7th Canadian province to distribute Up Cannabis. The company recently announced an agreement with the Prince Edward Island Cannabis Management Corporation and has also formalized supply agreements with the Nova Scotia Liquor Corporation, Ontario Cannabis Store, and the Alberta Gaming, Liquor and Cannabis Commission. And that's your news for today.
Ricky's back.
Ricky's back. Ricky's back.
Welcome back.
We didn't see her back. But
No, we didn't. Actually, that was my mistake. It's Ricky doing the news, not Liz. Anyways,
okay.
KushCo is Kush Bottles, is what we used to know as Kush Bottles.
What do they do?
I don't know, actually. I have no idea. They're American, so they're not up in our market. That's a good question. What do they do? If the audience knows, feel free to put something in the little comment box and tell us what KushCo does, and we'll talk about them some more. And more, tell us if you own KushCo and whether you think it's a good, real deal or what's going on. So at this point, Ed, we're going to talk to...
Who are you going to talk to?
We're going to talk to Ghostbusters. No, I'm going to log into my YouTube account here. Connor Shaw, that's not correct.
Is today Tuesday?
Today's Tuesday, Ed. Why, you got something to do? You got somewhere to be?
Yeah.
What? Where?
Here.
Oh, okay. Well, that's good.
So I think I better be here.
So what are you seeing? What's your technical?
Well,
jumbo
Tilray
time?
really sticks out. Tilray sticks out.
Yeah, what's going on there?
Well, look. Is it coincidental that the thing's starting to move just before the big whack of stock comes out?
I think that it is coincidental. Not at all.
So you don't think it's coincidental?
No, I think that the the very talented and focused, attention to detail oriented people at Tilray are like, you know what? We're starting to see a little bit of flat come back, and our stock's dropping because everybody's got this idea that when our why don't we make some arrangements for some people to buy some stock, and thereby put to rest that rumor that we've got this big blush of stock and it represents an overhang. And that's what my suspicion would be. Now, I don't think anybody would want to admit that.
Suspicion.
Suspicion.
That was a good song.
What song was that? I've never heard of it. Save password. Boy, now I gotta... Oh yeah, here we go. I'm slowly getting to my YouTube channel so I can actually talk to the people. Don't worry, people, I'm coming. I'm a-coming. We're gonna talk to you.
Right now.
Not quite right now, because it's taking forever to load.
Okay. Okay, I'm gonna put up the S&P chart.
Yeah, what's going on there?
Let's go right now. I want to just see, I haven't looked at the S&P, up another 21 points. This thing has now moved from 2,300 to around 25.70.
You don't say.
Five.
No
That's
kidding.
that's 10%.
That's amazing.
So
Ed.
we're quickly adding half of the loss.
Really?
Yeah, you know what? Here, I'll just put.
Oh, look, somebody's pointing out that my new stock boss hit 55 cents today. Thanks, James Watson. See? I don't know. Instinct sometimes works. Tilray at Midas. Why is Tilray up today? Ha. That's
Look at that dramatic. Somebody said that the other day, I read it somewhere, that this was one of the worst, swiftest corrections.
worst, swiftest?
Like, in other words, violent to the downside. One of the worst in like 80 and 60, 70 years.
Nah.
Since 1962.
Nah.
That's what I read.
Nah. Where did you read that, Ed?
Where did I read it?
Yeah.
I probably read it on on investing.com. When you hit like a certain commodity or an indice or whatever,
Yeah.
there's commentary.
Yeah.
And or somebody might have sent it to me.
Yeah. What about the price of gold, Ed?
Let's take a look.
What do you look at for gold on the
GLD. GLD, which is the big
SPDR.
Yeah, that's it.
SPDR Gold Trust. Yeah, I don't like that one.
You don't, eh?
No.
Why?
Because they can buy paper gold. They don't have to hold physical necessarily. They can lend out their gold. I read the prospectus once on that thing, and it was full of.
Well, this tracks. Jeez.
What's going on?
Oh man.
You having a hard time over there, Ed?
Yeah.
Technological difficulties?
Technologically
Challenged?
inept. Come on.
You know, we had Charting Man Dan here a little while ago for his usual Tuesday gig, and he had some interesting things to say about some of the action in some of the stocks. God, I love that rock star beginning, eh, Dan?
It gets me every time. It's great.
Oh, I love it. How are you? Happy New Year.
You too. Good to see you.
You bet. Dan, let's jump right into it. You made some interesting comments towards the end of last year suggesting that we needed to see some things happen in order to cause a reversal in the broader market as well as in the cannabis sector. Why don't we walk us through that and what you saw that actually did unfold to cause the reversal we're now enjoying?
So it's a global market and there's so many interconnected pieces, and oil and the market are very generally correlated, and we could see that the top of oil was in October, and that correlated with the top of the S&P 500. So in order to see any kind of significant bounce in the S&P 500, we needed to see a significant bounce in oil. And then, of course, if those two events happen, then we're going to anticipate that the Canadian MJ space is going to bounce as well. And that's how it ended up all playing out, both oil and the S&P 500 bottoming at the same time. A complete shift in sentiment from fear that, the markets are collapsing to everybody, jumping in on the bounce at this point. So it was oil that was an initial indicator for me. And then, of course, the S&P 500 following along with it. And that took all sectors with it as well.
Mm-hmm. So the price of oil, it doesn't really look all that strong at this point. So does that indicate perhaps that the reversal that we're enjoying is perhaps a little bit tenuous?
It's certainly a potentially temporary bounce. Right now, we're looking for just weekly lower highs to be set. And when we look for a trend change, we need higher lows and higher highs. This is a relief bounce from oversold conditions. And, some people get suckered into saying, oh, that's the bottom, and it might not be. So I'll point out in just a minute what we have to see on the charts to be in comfortable as bulls. And you're right, we're not there yet.
Sure. So from a technical perspective, are you seeing anything to indicate that 2019 is the year that we sort of shift from a speculative expectation from the cannabis sector to a balance sheet performance sort of valuation perspective, in that now we're going to have full quarters of recreational reported in the Canadian context, but also we're going to start to see some of these multi-state MSO operators that went public in Q4 and Q3 of 2018, and sort of underperformed. We're going to see some more financials from those companies that'll give us a better sense of what's happening. Is there anything in the technical analysis side of things that you see indicating either favorable optimism or pessimism and negativity?
Well, in my opinion, it's going to be separated by, we'll call them different tiers of companies. So tier 1 will be Canopy, Aurora, Aphria, and Tilray, and Kronos. And in my opinion, those are the ones that are going to be heavily focused on the results, because the market caps have already gotten to a very significant point where it's time to, prove it. All right, bulls, show us what you got. Prove it with these numbers. So I think for them, it's going to be a different criteria of what the market expects, as opposed to the tier 2 names, maybe HEXO, TRST, OGI, and then maybe some other names in the US. But I believe that those names are still going to see some speculation type running for market caps to get inflated, for the potential of any, deals that could be worked out. So we're looking at, again, the broader market to always dictate where sentiment is headed and what direction we're looking. But I do think it is a good point to distinguish these companies that have already hit the spotlight. They've already gotten all the attention and all the market cap that goes with it. And I think they're going to have more of a bit of a burden to prove it with the numbers.
Mm-hmm. So does that suggest then that from a day trading perspective that the tier 2 names that you were mentioning might be more interesting in terms of opportunity because of the increased volatility?
Absolutely. They've got higher risk and higher reward with those names, and that's where the short-term traders are going to be looking. Although those with larger capital, it's still much easier to trade names like CGC, and that's actually a difficult spot where if you have large capital, you can individually move these companies, their share price a certain couple percents if you're trying to enter all at once. So it does get a little bit tricky, but in terms of risk to reward opportunity, it is the tier 2, tier 3 names that are going to have more of that opportunity.
Okay, let's take a look at some charts now, and you can demonstrate more visually what we're talking about here.
So here we're looking at the weekly time frame for oil first off, and we can see we had a bullish reversal candlestick that marked the bottom and a 2-week bounce at this point. So what I was talking about with the trends needing to change, we need higher lows and higher highs. Our last lower high and our last resistance level is up at 54.55. So anything under 54.55 is just a lower high on this longer term time frame. If we pull back and form a higher low on the weekly and then change the trend, that's when we're going to see a change in trend. And obviously that's what the bulls want to see. So it requires brief consolidation and then a bull break to change that trend. And you can see the correlation where this is what oil looks like on the weekly time frame. And we pull up the S&P 500 and its weekly time frame looks very similar. A solid bounce 2 weeks into the bounce. But again, we're just looking for a lower high because the last resistance level was all the way up at 280. Anything under 280 is just going to be a lower high. Have to see the pullback to establish a base of support and then continuation to change that trend. So like you said, the bulls do still have work to do and do still have proving to do. And now that we're seeing the start of this consolidation from the top of the bounce, we're seeing that in the MJ sector as well. So I can see CGC here. Look at how different this bounce is. This is the weekly time frame. You can see the oil and S&P 500 bounce was strong. This is a very weak bounce. And what I'm seeing and observing in this space is that the names that have already hit the spotlight, and in one of my recent videos, I compared it to, in terms of percentage gains. If we're looking at who's going to see bigger percentage gains, we're looking at names like CGC as I compared it to bands that have already hit the spotlight. They're on MTV. Everybody knows their names. To increase their fan base a significant percentage, it's just not going to happen because their fan base is so big. So I compared that to CGC already hitting the spotlight. We've already got some institutions involved. There's a ton of market makers on it. So because there is so much interest, so much market cap, the percentage gain that we're going to see in the market cap, it's not going to be a massive increase because it's already so large. So this was a fairly weak bounce, but we see other names, like I was talking about, those tier 2 names where their bounces were huge. So let's just look at a percentage comparison. CGC from the bottom to the top of the bounce the last couple of weeks, it bounced 16%. And that's a solid gain, no doubt. But if you look at these other names, HEXO, from the low of the pullback to the high of the bounce, we ended up going 59%, hardly even comparable. And you look at a bunch of names and there were significant correlations with the low cap names that are less liquid, that are not trading on major dual listed exchange. So these exchanges, we're not listed on the NYSE or the NASDAQ. And in my opinion, that lack of liquidity means a little bit of dollar volume goes a long way to moving these prices. So here's GTII Green Thumb. They too went 60%. And you have names like, N, these smaller companies, Namaste, they saw a significant bounce from their lows. So basically what it boils down to is if you have more liquidity, like the names that are on legitimate exchanges in the US and dual listed in Canada, they have more market makers. There's essentially more supply and demand of shares both. So a little bit of dollar volume doesn't do a lot to move the price. Whereas the names that are only traded on, say the CSE and the OTC, there is way less liquidity. So a surge in volume leads to a very significant surge in price because there's not as much liquidity to absorb that dollar volume.
Fascinating. All right, Dan. So then where do you see the greatest opportunity for the retail guy who wants to trade short term in 2019?
I would say these tier 2 names, their bounce that they just proved, those 50-60% bounces were significant enough that we can look for healthy consolidation to form that higher low. So just on this weekly time frame, like I was talking about with oil and SPY, we need the higher low and then the higher high to change the weekly trend. And because these bounces were so significant, the bulls have much more space to work with to be able to consolidate and form that higher low. Whereas if we look at CGC on the weekly, there is not nearly as much space to work with to try and form a higher low and then change that trend. Like I said, we only bounced 16%. So if we pull back a solid percentage, we might drop down to a lower low. So more space for the bulls to work with. I'm looking at HEXO, OGI, TRST, all these low cap names that had significant bull moves. And we're just going to look for healthy consolidation to establish a higher low of support on the weekly timeframes.
Sure, you bet. Those are all great names. I'm curious then, is there a correlation between the fact that when a company becomes listed on 2 major exchanges in Canada and the US, that its potential sort of range of volatility diminishes accordingly?
I would say that's absolutely what it leads to.
Okay, well that's really interesting. We'll be able to mess around with that in 2019 here. Dan, thanks very much for joining us again. We'll come back to you next week and get some more great stock chart analysis.
Appreciate it, James. Have a good day.
Thanks, you too. Gotta love charting Man Dan, eh? Never, ever at a loss for words. And that's an interesting strategy that for day traders to, watch the mid caps, the second tier guys, like loath though I am to suggest it, like Hexo is something that, you could have bought that thing for $4.75 just at Christmas time.
Yeah, you could have bought
Organogram.
You could have bought C-Web for $12.50, and it's now $16.50.
Yeah.
That's $4.
Yeah.
That's a third.
Yeah, no, I know. I own C-Web. You know what I'm going to do is I'm going to offer it at 17, and if I get taken out, I'm going to go back on the bid at 12. Because I think in the general context of the market, sort of pinch and swell, not pinch and swell, but ebb and flow of tide.
Whoa. Whoa.
Pinch and swell, eh? This pinch between your cheek and gums. I think there's opportunities here to make money on like in 2-week increments. Like you look at that C-Web, 2 weeks ago was $12. And before that,
yeah,
2 weeks before that it was 17.
Can I make a suggestion?
Sure.
Before you put the order in, why don't you wait and set up a reminder that if it gets to 13, look at it and discuss or see if the conditions have changed. In other words,
now that means I got to pay attention. And Ed,
well, the
one thing I can't afford is to pay attention.
You can't afford to pay attention. Okay.
No, I don't know how.
Okay.
I'm like, I've got the attention span of a gnat.
Really?
Yeah.
I'm going to start calling you Nat West.
Yeah, Nat was my grandfather.
Nat?
No. Anyways, are we going to have some fun here today?
Yeah.
What time's Cam Battley going to be here?
I think
Cam Battley's going to be here at 4 o'clock. That's in 30 minutes.
I'm going to punch up Tilray here. What do you think of that?
Yeah, pull up Tilray, and you finally got over calling it Tilroy. It's 81.76 right now. Look at MedMen struggling down there at 442. It's having a tough time.
Can I?
Yeah, feel free.
Thank you.
Yeah, no, my pleasure.
Well, I can't because this cord's...
What happened? Too short?
Yeah, got a short cord.
Short cord. Well, there you go. You got your chart up.
Got my chart up.
Yeah, that's your chart. So it's like, to Dan's point, very narrow trading ranges over the last couple of weeks.
You know, I got to tell you, for that move, if you look at that chart and that move, and I think I'll illustrate it better with a 1 month. No, I won't. No, I won't. Come on. Oh, jeepers creepers. There we go. Okay, so this is crucial, okay? Right here.
Lay it on us, Ed. Enlighten us.
So we bottomed here, and we had a nice recovery. Corrected here, we've been moving sideways. But there's I'd say that line right there. And we hit that line today. You look, there's a little wick there. If we get through that, number here, which is I think about another $1 higher, maybe $2 higher, then I think it could move. Like this suggests it'll go back to 100. Mm-hmm. There you go.
Okay, we're going to have a fascinating little fact for you, and when we come back, we're going to have a guest from the Business Development Officer from Canopy Rivers is going to be here to explain how they do what they do.
Okay, now we're going to test your knowledge. At the Woodstock Music Festival in August of 1969, drugs were illegal, but no one was charged or even stopped from openly using drugs the entire weekend. Marijuana and LSD were the most commonly used, but you'd also find cocaine, mushrooms, and opium. Not everyone was having a good ride, though. Freak-out tents called acid tents were erected to help with overdoses and bad trips. So here's our question. Which group was helping people tripping out in the acid tents of Woodstock? Was it A, the band Wavy Gravy and the Hog Farmer Crew, B, the New York State Police, or C, local nurses from the Bethel Presbyterian Hospital? The answer is coming up shortly.
Hey, welcome back. And my guest right now is Narbe Alexandrian. He's the Vice President of Business Development. Narbe, welcome.
Pleasure to be here.
Yeah, tell me about your role at Canopy Rivers.
So my role in Canopy Rivers is to lead the investment team. So we look for minority investments all across the world within the cannabis value chain. So our whole process is understanding what are the best of breed companies across that value chain and to synthetically create a vertically integrated cannabis company with the best companies you can find across different sectors such as technology, pharmaceuticals, cosmetics, brands, cultivation, you name it.
Yeah, you bet. So today you guys put out a press release announcing that you made an investment in, was it Headset?
Headset, yep.
Yeah, and that was really intriguing to me because it's not a cannabis product producer per se, but rather it's focused on the information of cannabis. And so what was it about that transaction? Maybe we could use that as a bit of an example as to the process by which you guys make a decision to make an investment.
Absolutely. If you take a look at the traditional technology industry, data is everything. Data moves companies. Google is worth what it is because of the data. Facebook is worth what it is because of the data. Same set of data is going to be very applicable to the cannabis industry. Right now, a lot of the CPG companies, let's backtrack. CPG companies in the traditional realm, Procter & Gamble,
Consumer packaged goods you're talking.
Exactly. When they create a product, they do about 2 years of R&D testing. They look at not what formulation they're going to put in the product, but what marketing is going to look like, what branding, what the brand is going to be, what the logo is going to be, what colors they're going to use, what demographic they're going to go after. This is all based off of a data set that they grab from the likes of Nielsen or IRI research. Mm-hmm. That same aspect has to be applicable to the cannabis industry down the road as brands start to froth up and take more of the mind share for the consumer. So what are the brands going to use in terms of finding that data? Well, Headset is the only and the first real-time retail intelligence platform out there that grabs data from POS systems and gives a set of data to the retailer, gives a set of data to the brands, and gives a set of data to the broad industry of what's actually moving, what market share different brands have, how things are being priced, and what trends we're seeing in the market today.
Mm-hmm. So do the recipients of that data pay Headset for creating the data for them?
No, so retailers actually get what we call Headset Retailer. And Headset Retailer is a system for them to track inventory, to track vendors, and to track bud tenders and how the bud tenders are selling. In exchange for getting that platform for free. They give away their POS system data for free. So Headset's integrated into 20 different POS system providers right now, so that automatically pulls the data very easily and provides it to the brands as well as the broader industry.
So would they be plugged into, for example, the Ontario Cannabis Store online?
Yeah.
Oh, interesting.
So they have an integration with Shopify.
And so how will Canopy Rivers monetize that investment over time?
We think data is going to be huge in the industry. We think that it's going to, whoever captures that data and holds that data is going to have authority on understanding what trends are going to exist in the market today, what products customers need, what products customers are going after in real time. So we think that gives us a lot of insight of what's going to happen within the industry, which can guide us into our investment decision making of what brands to look after and what verticals to focus in on, as well as tons of other things you can do with the data down the road as the platform becomes bigger and more states start to subscribe to it as well.
So when did Canopy first become aware of Headset, and what was the sort of arc of events that happened before you said, hey, you know what, let's make an investment?
We've been tracking the retail business intelligence space for quite some time right now. We did a lot of research of talking to consumer packaged good companies, snack and beverage companies, and finding out what is it that drives their understanding of the industry. And through a lot of those conversations, Headset kept coming up. Headset's customers aren't just the brands, aren't just bud tenders and retailers, but they're non-cannabis companies as well. So these snack, beverage, consumer product goods companies, they're actually customers of Headset. They look at the data, and while they haven't done any investments within the space or haven't had any headlines, they're passively monitoring what's happening within each of those geographies.
So does this represent a shift in the interest of Canopy as an investment enterprise away from products and consumer packaged goods into what is the next evolution of the cannabis industry, data and monitoring and that kind of thing?
I think our investment thesis stays the same. We're looking at everything across the entire value chain. So cultivation we still take a look at, brands we still take a look at, of course, and we think brands are going to be huge in the next wave of cannabis. But as time goes on and as mass market takes hold, and there's going to be 3 or 4 large players within the cannabis space worldwide, we think that the technology is going to be a horizontal layer underpinning a lot of these different pieces of the value chain. And technology is broad. I don't just mean software or hardware. I mean genetics, plant sciences, life sciences. A lot of the technology that exists within there as well can be applicable to cultivation as well.
Yeah. So what is the typical investment size that Canopy Rivers considers? What's the sweet spot?
Yeah, we're unique in the sense that we're life cycle investors. So we can write checks anywhere between $500,000 to $40 million in one shot. And what makes us really unique is that there's no stage that really scares us. So we can go in at a very early stage, in a seed stage, write a small check and take a large percentage, or we can go all the way to the very end, right before the company goes public, and put a check in with a closer exit.
When you make the decision to invest, do you have an exit strategy in mind, or is it more of an open-ended, we'll make an investment now, see how it goes, consider the exit at some point in the future? It's not part of that initial consideration.
We always have to think about an exit. We do make investments and we want to find out what's out there, but sometimes these companies don't really require an exit. Maybe they go cash flow positive really soon, and we have cash flows and we have a number of assets that provide us with that. There's other companies that we have in our portfolio that are well suited for an M&A by a large player once legalization takes place in the US. There's other portfolio companies out there that are very ripe for going public through an RTO or an IPO down the road as well. So for our portfolio, when we manage it, we look at all of those different areas. We spread across the risk across each of those 3 segments in order to create a balanced portfolio for our shareholders.
So would you say that the portfolio is tactically opportunistic as well as strategically long-term focused?
Absolutely, and we look at different ways to tackle those and to break those down, whether it be international markets we're looking at or nascent industries that cannabis just hasn't gotten into but is going to follow that path because every other one of its peers in terms of industries have done that same thing.
Sure. So then, without revealing any secrets, can you give us some indication of emerging opportunities that people might not be thinking of yet?
I wouldn't say that there's nobody thinking about it because there's a lot of smart people within the industry, but we believe there's a lot of segments outside of just cultivation, and I think plant science is probably my favorite one. Just understanding how the plant grows and what the genetics look like and what technologies are added on top of that. In addition to that, I think brands are going to be huge as well. There's a lot of really huge brands being developed, and we can see that's the Headset data as well. And we can apply that to a bunch of different geographies. As the US can't do that, as a Canadian, we can.
What is it that makes a great brand relative to one that's not so great?
There's a few things. One is absolutely distribution, getting your product out in as many people as you can, in many stores as you can. Secondly, it's just customer service. It's understanding the customer in and out, talking to them, listening to them, following them on social media, call it, but just really getting a deep understanding of what the customer wants and how they're reacting to the product, and skewing it, being flexible enough to skew the product line. Maybe it's a color, maybe it's a logo, as the customer's taste changes, and they want something else.
Very interesting.
Yeah.
Narbe, that's great. We're going to leave it there for now, and happy to have you back and get more secrets from the Canopy Rivers business machine. When we come back, we're going to look at the answer to our fascinating trivia question of the day.
All right, earlier in the show, we told you that at the Woodstock Music Festival, people were doing drugs, but there were also these freak-out tents erected. They were called acid tents, and we asked, what group of people were helping the people that were tripping out in those tents? Well, the answer is the Hog Farm, who were a band, a light show, and a peace-loving and promoting entertainment group. When the bad trips clearly outstripped the ability of the inadequate medical staff on site, the band stepped in to help people down. Instead of using drugs like Thorazine to treat them, Wavy Gravy and his crew, who had practical experience with drugs, helped them through the experience to finish their trip safely. If you got this question right, maybe you were there.
Folks, we're back.
So, did you know about Wavy Gravy and the Hog Farm Band? You did. Why didn't you say anything?
You know, I actually was at a concert in Milwaukee, Wisconsin, and they were passing around flyers saying the next big one was going to be Woodstock. You gotta go.
Really?
Yeah.
Did you go?
No.
Why not?
Because I thought, what the hell? I just saw everybody. You know who's at this Milwaukee? Led Zeppelin was there. Wow. Cream was there.
Wow. You were at this concert.
I was at this concert.
Did you do LSD?
No.
No? You weren't into psychedelics back then?
No, we smoked a little reefer.
Really?
Yeah.
You weren't into psychedelic chemicals back then?
This was in '69, right? I was 18 years old.
Wow. That's
18.
when I started. Actually, I started doing psychedelics when I was like 14. That was my first hit of LSD.
Really?
Yeah. Not that I'm proud of being, a lifelong enthusiast.
There. Joe Cocker.
Joe Cocker.
Yeah. John Mayall, Motor City 5. You heard of Motor City?
No, way before my time. Happy to report, Edward.
Yeah.
There's some speculation.
The Who are there.
The Who. Boy, I've been to 4 of their farewell tours.
Yeah. You know, I can't because I'm stuck. I'm stuck.
You're stuck.
Yeah.
That's because we're sick of you getting up and running off,
All right.
There's some speculation in our chat room here on YouTube about Aurora buying back stock. Have you heard anything about that?
Aurora buying back stock.
Yeah, to take down the float because it's approaching 1 billion shares.
Well,
have we seen anything filed like that? Like, where is the speculation coming from? Is Aurora going to acquire Namaste for their largest world database of MJ users, as they are already working together with the online platform?
Interesting.
Well, Al, if we knew that, we would be buying the shit out of Aurora.
We'd be buying shit.
Well, no, we'd be buying the shit out of Namaste. Or would we? I think we would. Would you? I would. Look at Wayland Group. Our client, yes, but I also deployed a lot of my hard-earned capital into that company, and it's $1.39. Actually, we were sitting around the table having a beer last night. Everybody picked their top pick for 2019. What was yours?
Crown Mining.
Crown Mining. And what was mine?
Wayland.
Wayland. You were paying attention.
I was.
That's hilarious.
You know, sometimes I don't I don't look like I am.
Well, sometimes you're not.
But I'm not. But sometimes I don't look like I am on purpose, and I'm going.
That's crafty.
I sort of have a
crafty. Anyways, buyback is incorrect according to our user GTZ. It's a poison pill that allows ACB to buy shares in the event of a hostile takeover. Oh, I see. You guys are all reading the Cedar Docs, perhaps. How can Midas afford such a huge team with so little views? What do you mean so little views? You know we get 2 million views a month? It's like so little views per content item because we put out so much content. But Midas Letter gets in excess of 2 million views a month every 28 days. Did you know that, Ed?
No.
You didn't?
You're keeping away vital information from me.
Well, you know what I'm going to do? I'm just going to make sure that I'm not full of shit here. And then I'm actually going to share this screen with the audience to prove that what I say is in fact what is Pravda. Yeah, anyways, how can we afford to put on such great content? Okay, sorry. Look at, okay, so on my NDI, it's on. Can you see it? We have 12,290 subscribers. Is it showing up there? 2.7 million views in the last, oh no, sorry, wait a sec. No, that's for the year. Or that's a 1 year running. So 2.8 million views for the last year.
Well, that's not bad.
182,000 views in the last 28 days. 1.6 million minutes of watch time. So this is why we can afford to put on such good... Actually, the way we can finance such great content is we buy the stocks of the companies that we like the best. So just because it's been a while since we've talked about exactly what is the business model here, we bring in companies, we talk to them. If we like them, we buy the stock. Later on, we sell the stock at a profit. And boom, Bob's your uncle. There's some money to make some great content.
Make some money.
But we also have a service where we produce documentary business film footage for these clients. We go out and shoot them and visit them and take them and distribute them. And we have all kinds of other services that we do. But under no condition is one of these services to promote the companies. So a lot of you guys think that we're one of these promotional companies, but that ain't the case. Happy to say. We deploy our own capital into this market. We put our money where our mouth is. As our old friend Fabrice Taylor used to say, we eat our own damn cooking.
We eat our own cooking.
We eat our own cooking.
Have you talked to Fabrice lately?
No, I haven't seen hide nor hair of him. Actually, I saw him on Instagram. His whole family was somewhere warm. I think it was down in Mexico. I thought, well, he's enjoying his life, that's for sure. Yeah, but no, I haven't seen hide nor hair of Fabrice in a while. Although he's, he's around. We'll see. I'm sure we'll see lots of them. Chiron Life Sciences at $1.58. You know, Canaccord put out a thing saying that that was their top pick. Actually, that's interesting. We invited Matt Bottomley to come on, the analyst from Canaccord. We didn't hear from him. Let's see. Ed, there's a video here. Vikas Ranjan. Did you interview Vikas?
Yeah.
When was that?
Today.
No shit. Is that going in the show today?
It's not maybe today, maybe tomorrow.
Oh, no kidding.
Tomorrow.
No kidding.
The Lord just spoke.
The Lord just spoke. He speaks to you, does he? Not on the phone.
I have a hotline.
You got a hotline, a direct line.
Yep.
To the Lord.
Special dispensation.
Really? Does he give you stock tips?
Yeah.
That's why you're so successful. You're getting it straight from on high. Whoa, okay, so here's the thing.
Hey, look at Namaste, $1.46.
What did you say that? Donnie's telling me he just bought me 10,000 Auroras at $771.
It's $771. I mean, he meant $671.
You think so?
I hope so.
You better get to the bottom of that. So anyways, yes, here's just an example of how this works. Cam Battley's going to be here at 4 o'clock. I just bought 10,000 shares of Aurora. Is that a conflict of interest? If it is, I'm disclosing it. So there you go. Now you know that I bought 10,000 shares of Aurora. I think it might be near the bottom. Why? Because Cam's going to come on and explain to us why they're putting out this guidance where they're projecting $55 million in top-line revenue and positive EBITDA by calendar Q2.
Yeah.
So he's telling me, I had lunch with him, he's saying, by God, we're going to be profitable in 2019.
Really?
Yeah, that's
now
he said that, looked me straight in the eye and said, I don't know if I should be sharing this with you. Actually, I'm pretty sure, you know what?
If he's not sure he should be sharing with you, and you decide to share it with the world.
Well, that's right. It's like telling, you don't tell a broadcaster, here, I'm going to tell you something, but don't tell anybody. Like somebody in the broadcast.
Here's something that's like you say, don't...
Boy, oh boy, here we go.
Boy, my memory's getting bad.
Is it?
Don't ask me for any more information because I've already told you more than I know.
That doesn't make any
Or
sense.
listen very carefully, because I promise I'd never repeat
You got any
this.
jokes, Ed?
Yeah, the joke's on me.
No, I'm just
Listen
kidding.
very carefully, because I promise I'd never repeat this.
That doesn't make any sense.
It makes perfect sense. That's what,
Listen very
that's what
carefully,
you
'cause I
do. You
prom-
call up a client and say, listen,
Sworn to secrecy.
I,
You know how when guys will say, "Hey, I got something really amazing, but I can't tell you," and you're like, "Well, why did you just tell me that you have some information that you can't tell me?"
Right. By the way, Tilray just took out that high from a few weeks ago.
No kidding.
Yeah, so it's now up 11 and change.
Wow, $83.
It could make its way to 100 here on this move.
Boy, oh boy, should we be buying it?
Well, like
Look
I
at
said,
Whalen's at $1.17.
Ooh.
Yeah,
up a nickel.
yeah, up a nickel. Interesting.
Weed MD, look at this thing chugging at $1.38.
At Midas Letter, Cam's going to be live today. Joel Shepard wants to know, Cam is going to be live in exactly 9 minutes. I can see him getting, what?
What's going on?
He's going live in an hour.
Who's going live in an hour?
Well, he was here a short while ago, and now he's going to be live because we haven't shown anybody. Let's not be splitting hairs here, God. Damn it. God damn it. I know the bastards. They got some nerve.
Yeah, those big ones really aren't really doing much, are they?
Here's Jonathan Marlowe saying 1,700 ACB shares long or until $45. Now, is that a bullish statement? Woo! Woo-hoo! Yeah. James Albert says Ed likes his Weed MD.
I like my Weed MD.
You like your Weed MD?
I like Weed MD. I think it's got lots of cash. It's got some smart people running it, some real businessmen.
Yeah,
they
Keith
got some
Merker.
locations. Keith Merker and
You know who we haven't
Bruce
had on the
Scully.
Yeah, Bruce Scully. You know who we haven't had on the show in a while who we need to get back here is Greg Engel from Organogram.
Yeah.
That stock's been doing really well.
Look at Canopy's up $1 today.
I think Organogram is probably one of the biggest takeout targets on the board, full stop.
Why?
Because it's such a well-built, East Coast-centric production facility. Don't forget, very underreported, underconsidered fact, cannabis is a perishable product.
It is.
It
so
is.
you can't keep it for...
You can, but it's like you can keep wine also for 15 years after you've opened it. Problem is, it's not going to be that good after the
Well,
first
unless
week.
it's a cab.
Unless it's a cab.
Well, okay. I'll take it under advisement.
Yeah, but James Albert is loving your Weed MD thing too. Weed
Let's
Street
take
Greens.
a look at...
what do we think of T-God? I'll tell you what I think of T-God.
AUSA. I want to take a look
I
at...
don't know much about T-God. T-God's fine. I didn't own it. Yeah, didn't buy it. Yeah. Nikadomi,
Well, so
mind your wealth, says, I love
why-
Organogram.
Okay, explain this to me. Why is all of a sudden Australis Capital moved from high 60s to $1.30?
Well, we'd have to ask Scott Dowdy about that, who keeps threatening to come on the show.
8 days. Look at this. Look at this.
I know.
Now that is what you see.
What the hell is going on there?
Like if you look, you just let me draw some lines. Let me see.
You know what? Let's get Scott Dowdy here now. I'm going to send him an email right now. Oh, no, I can't. This isn't my normal computer. I'm going to pull up my other computer. You know what? Why not? I can do this. Everybody's... Ashley McClellan says, anyone still wanting to hear from Vic? I'd like to hear from Vic.
Yeah.
Problem is, now Vic's built himself such a moat of peril because he said, we're going to line by line rebut. And now that thing's so old, and they never did, that now it's like, well, everybody's first question is going to be, well, how come you guys never rebutted line by line like you said you were going to? I mean, public company CEOs are held to a higher standard.
Maybe they were told by their legal team.
Well, but so what kind of, you don't go making these kind of outlandish promises to the market and then backtrack because then you've consulted your lawyer? No.
No.
Look at Liberty Health, up $1.08. Now,
Right.
look at liquor stores, $4.54 a share. That sucker was $9 a share back in November. $9 down to $4.54. We really got to look at that one as a potential buy. Now, these are the guys who have all the liquor stores in Alberta that they're converting into Aurora stores because Aurora owns 20% of them. So this is the thing, there's a lot of these tickers going by are actually partially owned by Aurora.
there are. You remember when they used to all go up or all go down?
Yeah.
Not so much anymore.
Favorite overused term of the day, industry jargon, bifurcation. You got bifurcation going
I went
on.
out the other day to buy some furcation.
Bifurcation. I used to be heterosexual, now I'm bifurcated. Just in case you're interested, Ed.
Okay. I'll take that under advisement.
No, just kidding. You're too old for me.
I'm too old.
Yep. I'm too old for me, for God's sakes.
Okay.
Anyways,
I wonder if we're going to see another big company.
DC Fire 2. Hello, Midas from Illinois. Hello, DC Fire 2 in Illinois from Toronto. Love that. I love that. Hemp was up 22% today, says Cameron Peebles. Hello, Cameron. Thanks for that little bit of intel. We always like to have some cross-current communication with the set here. Let's see. Be an interview clip today seemed to partially confirm some of Hindenburg report and partially dispute. BNN. Yeah. Cam Battley coming up. Stay tuned. Oh, that's us saying that. Cam Battley's coming up. Stay tuned.
Okay. Well, the market's
just to be
about
clear,
close.
this is not live. In fact, Cam's not here, but he was here 2 hours ago. We had a conversation. We pre-recorded it. Nobody's heard the conversation, so it's not live, but it was live 2 hours ago. Is anybody upset by that fact? Let us know in the comments if you're upset by that fact, because there's been some talk about having no more pre-recorded segments, just doing everything live. Everything live.
Really?
Ugh, that would be just crazy! We'll have to be so on top of the game. Anyways, people are now speculating on what Cam's... Oh, look, people are talking about Hive here.
Okay, so did you see here where the Q2 revenue for Aurora is going to be 50 to 55 million? You seen that? I guess you have.
We've been talking about it all day.
Okay.
In fact, that's what we were...
Oh, okay. Oh, Earth Ed. Wake up, Ed.
It was in the... They put out that news
You know
very early this
where I
morning.
found that out?
Where?
On your homepage. I did. I'm on the...
Well, it's good to know we can keep people...
What if I click on it, see if the thing goes up by 1?
All right.
What do you think?
Well, then I'd have to tune into the analytics.
Okay.
Yeah.
Well, Afria, look at that, eh?
Afria. Do you know it's actually pronounced Afria? Vic Neufeld himself corrected me on that. Hey Vic, when are you coming back on the show? We promised to go easy on you. Here's the deal. You and Andy DiFrancesco have to come together. Ooh, boy! Well, that's going to be some hot time in the old town tonight. We're not going to go easy on you like Christina Pellegrini. Oh, no. We're going to ask you some of the tough questions. Mind you, we know you're going to have a great response because, hey, you guys are market pros. What can we say? Anyways, it's 3:58, but I'm tired of waiting. Here's Cam Battley. Welcome back, Cam. Happy New Year.
Happy New Year. How are you doing?
I'm fantastic. How are you doing?
Excellent.
You're looking good.
Thank you.
What's with the suit?
The suit. Well, I wanted to look pretty for you.
Oh, thank you.
No, actually,
I feel so underdressed.
No, I'm speaking at Altacorp. Their conference is in Toronto later today, so I'll be over there.
Institutional Energy, Cannabis, and...
Yeah, it's Energy, Cannabis, and Life Sciences, I think.
Oh, how appropriate.
Yes.
All three things in one little box. Excellent. Cam, you guys put out a great press release today that really sort of changes the conversation about Aurora and really the sector in general, in that you're projecting, you've actually given guidance, and you're projecting revenue between 50 and 55 million with positive EBITDA in Q2 2019. Now that's the period ending December 31st, 2018 on the calendar, is that right?
We're providing guidance on our revenues for the period ended December 31st, 2018, but we're also looking forward, and this is critical. We're looking forward to by the end of the second calendar quarter of 2019, we are now projecting positive EBITDA, and that is a major shift. It's a big deal for us. It's a big deal for the sector. It's what the institutions are looking for, and it signals something important for Aurora. We have been in a powerful growth phase. We have been growing organically, obviously. We've been very busy with M&A, and now Now, what we're signaling is that we've achieved substantially what we need to in terms of creating this global integrated cannabis company, although there'll be some more moves into additional international markets. Now, we get to shift gears and focus on disciplined execution and cost management because we're going to be moving into the era of profitability, and that's a huge deal.
Interesting. So then, this is not necessarily a surprise to you, management, or to investors who have been following the story closely.
Yeah.
This is more or less delivering on what you've said you were going to deliver on, and a little bit ahead of schedule.
That's exactly it. And if you take a look at what we've achieved in the last year, it's enormous. A year ago, in January 2018, we had production capacity of about 5,000 kilograms per year. 12 months later, we have 20 times that production on an annual run rate basis. So a lot has happened in the last year, and it has been according to plan. Now, one of the reasons why we wanted to provide guidance this time around, it's the first time we've done it, is, well, a couple of things. One, in the last earnings season, it was a crowded earnings season, and we delivered a very, very strong quarter. And it was followed by some other companies that reported not such strong quarters, let's say. And we felt that we maybe got a little bit lost in the shuffle. So we wanted to do that, among other things. We wanted to separate us out from the pack because we're very, very pleased and very proud at the way we're executing. In addition, it's been, I think, a little bit challenging, particularly in the last couple of quarters, for analysts to produce estimates, to project forward-going revenue and EBITDA. And so we wanted to provide them a basis for clarity on that. And that's exactly what we've done here. And if you take a look at the release that we put out today, not only does it indicate a range of revenue that we anticipate reporting on February 11th of between 50 and 55 million, net of excise taxes, let me add. If we had included the excise taxes, it would have been several million higher. But we also wanted to make it very, very clear that we've managed to get a real strong handle on our costs and a good idea as to what they're going to be going forward. And revenues are going to be rising significantly faster than costs. And that's what gives us a high degree of confidence that we can project positive EBITDA in the second calendar quarter. So if you want to track where we're going to go, it's pretty simple now. It's watching our production rise over the course of 2019 and then 2020, applying the gross margins and the EBITDA that you anticipate we're going to be able to achieve, and we're going to be very transparent about that. And that should give you a really good idea as to where we're going to be in terms of revenue and EBITDA throughout the subsequent quarters in 2019 and into 2020. It should make it a little bit simpler for analysts. And I mean, the real startling example of how difficult I think it's been for analysts, I think, was maybe Canopy in the last quarter, where the range of analyst estimates, I think, went from about 31 million to 83 million. That's a heck of a range. So we're trying to make things a little bit easier, a little bit clearer.
Mm-hmm. Okay, so that, that's very positive, but it does beg the question, and as a shareholder in Aurora, I really want to know, that's great. Positive EBITDA is fantastic. It's a step in the right direction. Mm-hmm. But at what point do we see actual profitability?
You're looking for positive cash flow. I think we're looking at the third calendar quarter of this year. So it would be our Q1 2020. So in the third calendar quarter of the year, positive EBITDA. The subsequent quarter after that, positive cash flow.
Wow, so that means profitability is just on the horizon.
Yeah, it really is.
Oh, that's great.
Yeah,
okay.
And it's been like, for us on the inside, it's been an exciting period, but it's been a long road, and yet at the same time, we only started to sell product 3 years ago today, so in January of 2016. That's when we actually started to sell product. That was the beginning of our commercial operations.
Oh, interesting. Okay, so, a lot of this is obviously predicated on the obvious successful deployment of resources as personified in the Aurora Sky facility.
Yes.
And so you also, in this press release, released some video of that Aurora Sky facility.
Of Aurora Sky and a number of our other facilities that are now up and running, from Aurora V to Aurora O in Lachute, Quebec, to the Bradford MedRelief facility, and ICC Labs as well in Uruguay.
Oh, really? Okay. So what we're looking at here in the background
Aurora
is Aurora Sky. And that facility is over 1 million
It's
square feet.
800,000 square feet, 100,000 plus kilograms of cannabis production per year, premium quality cannabis. And that is working smashingly. So all the automation is working, the technology is working, we're getting the yields anticipated, and that right off the bat with the very first harvest, that's an exceedingly good piece of news because we're very confident that we're going to be able to increase our yields and our productivity per square foot from there. So we're already producing yields that will give us that 100,000 kilograms per annum production, but we think that we can actually go north from there. So it's a very, very good sign.
Wow, that is so exciting. Okay, so what other sort of international nuggets are you going to deliver for us in this 2019?
A ton of additional international nuggets and a ton of additional catalysts, all in the short term. I guess we're talking about the next couple of quarters. So ICC Labs, we're going to be hearing news from them. We're we expect to get to the definitive agreement with respect to Farmacias
Very well said.
in Mexico. And I am brushing up on my Spanish now that we have a significant commitment to Latin America.
Right.
And then also in this quarter, in the January to March quarter, we anticipate beginning to sell our oils, our cannabis oils, in Germany. And that's going to be a big deal as well. There's significant demand for oils in Germany. That demand is not being satisfied. We think that we can move in a big way, and we've got some very attractive products that we can't wait to get onto the German market.
Wow, fantastic. So 2019 is just going to be a stellar year for Aurora.
Yeah, and then beyond that, the whole sector, the whole industry is looking forward to the coming into force of the new Canadian regulations that will allow us to bring into the consumer market the concentrates and edibles. So all of these product forms that we've all been looking forward to, ranging from vape pens to cannabis-infused beverages and various edibles, but also concentrates, including keef and even hashish, things like that. These are things that we couldn't imagine talking about a couple of years ago, but here we are talking about them today.
You bet. Well, that's great, Cam. Congratulations on all of that. And we'll come back to you soon. Thanks for joining me today.
You bet.
Canopy. So, hash, oil.
Hash oil.
Now,
What about the hash you have with breakfast? Is that the same kind of hash?
no, Ed, no.
What if you put some hash in it?
Some hash in your hash
Yeah.
for breakfast? Would taste like shit.
Hash marks.
Have you ever eaten hash? You have.
Yeah, once I thought I was a big piece of chocolate, dark chocolate.
It's useless to eat hash
I know.
because when you eat hash, you haven't decarboxylized the THC, so you're actually just
Aurora Sky.
It tastes like shit and it's awful. Aurora Sky. Yeah, have you been? Me and Fraser been.
I know. I saw that beautifully.
Yeah. Isn't
Beautiful
it?
facility.
Yeah.
I remember.
Really?
You had a nice little white outfit on.
Yeah.
It's cute.
Thanks. Well, we're just going to run that video right now just to put a punto on the discourse of Cam there.
A punto?
A punto. Un punto.
Un punto.
Put a fine point on that discourse of.
Okay.
Here's the visit to this is the Midas Letter visit to the Aurora Sky facility that occurred mere weeks ago.
This is a very, very different kind of facility. It's not a greenhouse. It's an indoor facility with a glass roof that allows us to harness the power of the sun. 17 flower rooms in Aurora Sky, all equal size, 34,000 square feet. And interestingly enough, our first production facility north of Calgary, Aurora Mountain, had 32,000 square feet of flower space. So each of the 17 rooms we have here is larger than the first facility that we built when we began to sell medical cannabis in Canada. So this is the mother room. In the room right now, we've got anywhere from 6,000 to 10,000 mother plants. It's from the mother plants that we take the cuttings and create the clones. We have 30,000 clones in Sky at the moment, covering each of the 8 strains that we're currently growing. Should we need to inspect any plants? We use exactly the same technology to harvest the plants. So when these beautiful young plants, which are only about a week and a half old, are 8 weeks old, they'll be about this high, and we will use the cranes to pick up the entire tables, take them into the central corridor, deposit them on the conveyor, and the conveyor will take them down 750 meters to the harvest area. There are no walkways, and we've reclaimed all of that space. And that's part of the secret to having the highest production efficiency per square foot in the global cannabis industry. At our first production facility, Aurora Mountain, we have 125 people working there. Aurora Sky is 20 times the size in terms of production, and we only have 400 people working here. This is likely the cleanest air you've ever breathed. The HVAC system that supports Aurora Sky is the most powerful you've ever seen, and it has to be. All of this facility is automated to the point where, depending on changing weather conditions, it automatically adjusts with the shades and the lights to ensure that the optimal amount of light reaches every part of the canopy. The glass itself is very special. It diffuses the light so that when the sun is directly overhead, if you stick your hand out, you will not get a distinct shadow. There's nothing like this technology anywhere in the world. We've invented, I think, 21st century cannabis production. What we're going to do is take this globally, and we're already operating in 23 countries around the world with more to come. By the beginning of 2020, we're targeting having in excess of 500,000 kilograms or 500 million grams of cannabis production per year.
Impressive. Very impressive.
Another fantastic effort there by Fraser Toms and Stephen Guevara and Tom Williams. God, those guys do good work. They're our home team. Let's have a round of applause for our home production team. Yeah. Anyways, so you can see why I like Aurora. I mean, you look at these other stocks that are getting beat up, and Aurora owns some of, there's going to be a point in time, I think, where people just turn around and go like, oh, you know what? I totally couldn't wrap my head around Aurora. Now I can. And if they were to do a consolidation of shares or a buyback of shares, which is pure speculation at this point, that would obviously have a...
How much cash are they sitting on?
Well, they've got a line of credit for $200 million. How much have they drawn? They
got a line of credit for $200 million?
Yeah.
With who?
With Canaccord and BMO. Was it Canaccord and BMO? Canaccord, or was it? No, it was a
Canaccord
convertible
doesn't lend
debenture.
money like that, do they?
Well, in a convertible debenture.
Oh.
Yeah. You know what? Before you quote me on that, let me just quickly go here to TMX Money and find out what exactly was the condition of that loan. Because, but you know, if they're going to report 50 to 55 million in revenue for the quarter, and is that the run rate going forward? That's 200 to 220 million dollar run rate going forward. The question is, has their operation cost them 200 million to run for a year? The answer is no, it hasn't. So here's the interesting thing: they're going to have this. Well, let's first see what the terms of the last financing was. News. Now, when was that?
Quite a while ago, wasn't it?
Yeah, it was. Let's see. We got to go back. Future of Pain receives final or completes acquisition of ICC Labs. Yeah, so there's another thing that's not really in. They've just bought ICC Labs. Okay, they've got Low in Quebec. Let's see, let's go back another one here. Okay, no, Cornerstone Investment. So they put an investment into Choom for 20 million. That was interesting. Choom, yeah. What else? ICC, Cannabis Beverage Market. They bought What's Brewing in Cannabis. Oh, that's a non-press release. Okay. They kind of have abandoned T-God, which is kind of very telling. I don't know what happened there, but yeah, that's something. So they're listed on the NYSE, or they completed their application in October. So probably having that cash on hand was part of that. So we're going back before October now. Let us see. How much cash do they have?
You know, Huge is up to 35.
Huge, 35. No kidding. That's up from 20.
Well, it got down to the low 20s, I think.
Yeah.
Mid 20s.
Interesting.
Yeah, some of these things are coming to life. I don't know yet what the traits are that separates the winners from the losers. I guess it's just like separating the mamas from the papas.
Well, I'll tell you what, in 2019, what's going to separate the winners from the losers is going to be EBITDA. Well, and ultimately net income. That's what everybody's waiting for. Let's see some serious net income on some serious top line revenue. If you were to look at, so Aurora's got a share price, well, it's got a market cap of 7 billion-ish, call it, 7 billion-ish. What kind of revenue would they have to be doing a year? Or what kind of net income would they have to generate to justify that if they were, say, a beer company or a liquor company?
They may never be able to generate that much revenue.
They may never be able to generate that much revenue. They got Germany, they got Italy, they got Australia.
You'd probably have to do 5 billion, 3 to 5 billion a year.
3 to 5 billion
revenue.
Well, now wouldn't it depend on your net income margin?
Yeah,
your net margin.
Yeah, because you'd probably, you could argue maybe a 20 multiple to earnings.
20x multiple of top line revenue?
No, 20x multiple of earnings.
So if they were trading, so
100 million profit, that's 2 billion.
Right.
So if they made 300 million, that's 6 billion.
Okay.
300 million.
So they'd have to do $300 million in profit.
Yeah, they'd probably need $1 billion in revenue.
$1 billion in revenue. Okay, so how far away do you think that is for Aurora?
Well, can they grow quarter by quarter?
They got capacity for 500,000 kilograms of cannabis. Yeah, so you call it 500,000 kilograms. Going rate is better than 4,000 at the lowest wholesale price. Cut that.
So what's the revenue going to be if they're going to do 50 to 55? They said that.
So that's my point. So you cut that in half. If they were to sell it all at half of wholesale, that would be $1 billion. Top line.
What do you mean cut it in half? 50 to 55 for the quarter is 200 a year.
No, I'm talking, but I'm saying they have capacity to grow 500,000 kilograms.
Right.
If you can grow 500,000 kilograms and you can get $2,000 a kilogram, that's $1 billion.
Okay.
So if your cost of production is less than 33% of that, there's your $300 million net income. Or gross income, rather. Gross margin. So they're getting close, is what I'm saying, to the current valuation of $7 billion. Now, what happens if they consolidate their shares? What happens if they take out another company that's got $1 billion in revenue?
Well, but to buy $1 billion company in revenue, you have to pay a lot of money.
Yeah.
And probably have to issue shares so that they'd be more shares.
Well, so first they consolidate, then they issue more stock to make another acquisition.
Buy some shares and then sell some.
It's like going short, then going long.
Yeah. Look, there's certain things going on here. I get the sense that, we may be heading into another period of some extreme action.
Volatility?
Yeah, to the plus side.
Consolidation?
To the plus side.
A little M&A activity? Actually, I think that's what's about to happen here in 2019 is, broad market notwithstanding, because the broad market is on shaky ground to say the least. If the broad market heads towards recessionary contraction, the cannabis space is going to follow suit, and that will catalyze M&A activity as companies become opportunistically cheap. And companies with big treasuries or with good share price with not too many shares out say, well, let's use our capital let's use our stock as currency to make some acquisitions in this depressed market. The other thing that's going to catalyze acquisition is if it takes off to the north, because then the companies say, well, we should buy this thing before it gets too much more expensive. The only time where M&A activity doesn't really tend to be predominant is when stocks are just drifting sideways. But
so how much cash is sitting on the balance sheets of, say, the top 20 marijuana companies?
Well, that's not really you mean as a group?
Well, you want to use that cash to deploy it to buy something like RIV.
Well, it's probably like $7 billion, of which Canopy's got $5.
Really?
Well, I mean, nobody's sitting on more than a couple $100 million, are they? Except, Tilray raised $450 million in that convertible debenture.
Right.
So they got a big bankroll. They've got Novartis in their back pocket, but Novartis hasn't really put in a ton of dough. Now they could, and I'll bet you that that's probably the subject of conversation quite frequently between Brendan and whoever he's dealing with at Novartis is like, what would a transaction look like whereby Novartis comes in and takes a piece of Tilray? Now, that's a really interesting conversation. If Novartis was to come in and take a piece of Tilray, that would be a sector-wide catalyst that I think would light the whole thing on fire. And you'd see the cannabis sector start to act independently of the broader market. Or do you think that it's always going to be chained to the broader market now that so many of these companies are listed on the NYSE and NASDAQ? Which would you say, Edward, is more accurate?
This is a new industry.
Yeah.
There's lots of cash. There's M&A activity.
Mm-hmm.
Just a minute here. I got to get rid of this call. Peter called me.
Yeah, okay, so let's see. Everybody's ponying up. T-God has $350 million. GTI has $300 million, projected $1.8 billion. What? GTI is projecting $1.8 billion in revenue? Oh boy, we've got to spend some time looking at all this stuff. That's what we're going to do. Reverse stock splits barely ever work. That's a good point. William Lay, our viewer, says reverse stock splits barely ever work.
Look at the MST, $147.
Let's finish that point just for a second,
Okay.
shall we? So reverse stock splits barely ever work. In other words, if you consolidate your share price in an effort to achieve a higher share price, the point that William Lay is making is that 9 times out of 10, it goes back to the price before the consolidation.
It usually drifts, yeah.
Yeah. So when does a reverse stock split actually work? Never. We're stumped. No, you know when it works is when there is a significant accretive acquisition coincident with the consolidation. Now we're talking about like what kind of consolidation would make sense in the case of Aurora? Like 5-for-1 would leave them with 200 million shares out. I don't think they'd want to go that deep. Probably 3-for-1 would leave them with 300 million. They give them arguably a share price of $21 at current levels.
So right now they're capped at about $6 billion?
Yeah. $7 billion. Well, 6.7 billion.
Yeah.
So I'd say a 3-for-1 consolidation. Now, so that means that everybody who's holding Aurora stock, if the stock goes to $21, it's a wash. But if the stock if you were to consolidate at 3-for-1 and the stock comes back from $21 down to 7 again, you've just lost 2/3 of your value. So this is the risk when you do a consolidation, and that's why I believe Mr. Lay is saying that consolidations don't work, because 9 times out of the 10, the share price comes back to what it was before the consolidation.
So you cut in half.
Well, you're wiping out the value of the shareholders. So it's very seldom that shareholders are supportive of a consolidation. Would you say that's accurate? Unless, of course, the thing is so baffed out and it's got a, you see mining companies that get up to 1-2 billion shares out and their stock price goes to 3 cents. That's a terminal condition for any company. You can't raise any money because it's just too dilutive. Yeah. Nobody wants to hold. No, you can't sell any stock because it's only 3 cents. So the only thing left to do in that case is to consolidate it, and then you don't really care what the price is because it's only 3 cents. If you were to consolidate a $2 billion float 10-for-1 and end up with 200 million shares outstanding, then at least you've got a float that you can go out and issue paper on to raise more money. With 2 billion shares out and a 3 cent share price, nobody's going to give you any money, at least. Unless it's like an OTC gray sheets deal where you're going to be trading at 0.000000000.
Yeah.
But anyway, so
there's always a battle going on between, like, are you making money or are you trying to disguise?
Yeah. James Watson says lots of stocks with 2 billion trading over $100. Well, that's a different story. If you got 2 billion shares out and you got a $100 million share price, then you've still got the ability to raise capital at an acceptable rate of dilution to the existing shareholder base.
Reefer Al's just made a good point.
It's survival of the fittest for 2019. Reefer Al, it's survival of the fittest every moment of every day.
Well, except in the middle of the bubble when everything gets.
Okay, this discussion is getting some traction here. So Simon Cleary says, surely with a clever reverse, i.e. over $1 or $5 for institution, the share price makes it more tradable. Yes, in the case of institutional stocks, over $1 or $5, yes. But now we're getting a little too broad here. We're talking about Aurora, and would Aurora benefit from a share consolidation? That's the topic of debate here, and I don't know.
You seem to be like a bulldog with this one here. You got your.
Well, it's interesting because I have heard it discussed in circles. I see a divide in the last couple of weeks. Some companies follow the S&P completely, and some deviate. Some deviate, but I would suggest only temporarily. Nika Domi. Most of them ultimately. They ultimately revert to the mean because they have to.
Yeah.
Would you say that's fair?
So today, for instance, the three big ones we see Canopy up. Mm-hmm. We see Afria down.
Canopy's up very slightly. Was it up? I didn't think it was up.
It's up $1.
Okay, it was up $1. Let's take a quick look here. Where the hell did Canopy go? Those are my U.S. ones.
Weed.
You want to smoke some weed, Ed?
Weed.
Oh, look at YOLO, 12 cents.
That's moving.
Yeah.
Lazy
Now,
beats.
YOLO, the weekend, I got to say that I own some ridiculous amount of shares on that I paid 20 cents a share for. And the stock's at 12 cents. So do you think I'm happy now that it's moving forward? In February, 140 million shares of YOLO come free trading.
Uh-oh.
142 million.
Ruh-roh. I heard David Stadnick's in Hawaii.
Where'd you hear that?
I heard it.
Getting ready to make this. Oh, you know what? I've had enough of your shit today, Ed.
You know what? I'm pretty well up to here with yours.
Yeah. How about you say, you know what?
My eyes are turning brown. I got so much shit
How about
in
we
me.
go out and have a quick cocktail?
Okay.
See you guys tomorrow.